Ladies and gentlemen, good day and welcome to FDC Limited earnings conference call for the quarter and year ended 31st March 2022. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the brief highlights on the financial from the management. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Varsharani Katre, Company Secretary and Compliance Officer of FDC Limited. Thank you, and over to you, Madam.
Good afternoon, everyone, and welcome to all of you. Glad to connect with you all for this year-ended earnings call. We have already disseminated the financial results of fourth quarter and year-ended 31st March 22 and the investors presentation as well. Now I would like to introduce the FDC management team present in this earnings call. We have with us Mr. Nandan Chandavarkar, Joint Managing Director, Mr. Ameya Chandavarkar, CEO International Business and Executive Director, Mr. Sanjay Jain, Chief Financial Officer, Mr. Mayank Tikka, AVP Business Development and Commercial Excellence. We will begin the earnings call with the highlights on financial results of the company by Mr. Sanjay Jain, CFO, followed by an interactive Q&A session. There might be certain forward-looking statements. These statements are subject to certain risks and uncertainties since they are based on certain assumptions and expectations of future events. I would request all the speaker participants to restrict their queries to 5 minutes only and avoid repetitive queries to save upon the time. With this, I shall now hand over to Mr. Sanjay Jain, CFO. Sanjay, over to you.
Thank you, Varsha. Good afternoon, all. This is Sanjay Jain. I will take you through the financial number for the quarter March 22 and the year end March 22. So to begin with our revenue performance. So on a top line, we grew by 9% on a YOY basis on March 22 quarter and at 15% growth on a year end. This growth mainly from our domestic formulation business, which has given a growth of 18% YOY on March quarter and 31% on a year end basis. This growth mainly driven by our large brands like Zifi, Electral and Enerzal. We are also happy to inform you that our both brands Zifi and Electral has first time crossed 300 mark as per the MAT IQVI data on March 22. The growth from the domestic business has been subdued with the export sales, the degrowth, which is around 15% on YOY for the March 22 quarter and by 35% on a year-on-year basis at the year end. This is mainly because of the degrowth in our US business on account of price and lower demand due to the competition. On the margin side, more or less the margin remains stable for the quarter and for the year end, barring around 1.5% impact on the overall gross margin. However, there is a one-off impact on our gross margin that is because of the provisioning which we have made towards the COVID-related inventory, the amounting to rupees 11.70 crore. The margin is also impacted because of our US business, which is a highly profitable business. So that's why the overall gross margin looks on the lower side as compared to previous quarter and the previous year. Going further on the employee cost is more or less stable at 22% to the revenue, as there are no major expansion to the field, barring few addition of the headquarters. Coming to the EBITDA margin, which is now stands at 5% on a YO for the March 22 quarter and on 16% for the year end. This has been on the lower side because of the lower base of the expenses which was there in the last year financial year, means March 21. As you all are aware, in March 21, the first half was completely under lockdown and travel on all were restrictive by the government of India. So that's why the major of the expense is related to the marketing, traveling, and few of other administrative overheads were on the lower side. And because of these reasons, the expenses were not there in the March 21. And because of all these reasons, the profit before tax and profit after tax as compared to the last year, March 21 quarter as well as year-end March 21 is on the lower side. Thank you. Over to Varsha.
Thank you, Sanjay. Now I request moderator to initiate the Q&A session.
Thank you very much, ma'am. We will now begin the question and answer session. Participants present on the audio bridge who wish to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Prithviraj from Unifi Capital. Please go ahead.
Thank you for the opportunity, sir. My first question is regard to the line mentioned in the press release with regard to the inventory material destruction one-time effect in Q4 FY22. So can you please elaborate on that? What is this regarding?
So you must be aware we have launched the COVID-related products in the financial year 2021 ending, and these inventory, as you all know, aware, the inventory is having the short shelf life, and the sales of these drugs has now been over a period of time decreasing. So the whatever inventory which was lying as on 31st March 2022, amounting to rupees 11.7 crore, we have provided considering the shelf life.
Oh, okay, sir. Got it. So to that amount, gross margin has been impacted. And any other reason apart from this impact in the gross margin, other than the whatever raw material inflation and solvent price inflation we are seeing?
Yeah, so this was the only one-off kind of an item. Apart from this one-off, there are inflationary increase on the raw material and packing material, which is to the extent of 1 to 1.5% on a quarter and a YOY basis.
Okay, sir, got it. Just one question on our OPEX part. So we have spoken about increase in marketing, etc., and we are seeing that number in OPEX. So our OPEX base, which was pre-COVID 80 odd crores last quarter, and last quarter we did 9500 crores. This quarter, despite revenue base of low revenue base, it was 110 crores. So is it fair to understand that large part of it is because increase in marketing spends?
Yes. So as I explained, the expenses were not there in the March 21. So on an incremental basis, these numbers looks on the higher side. So I will give you just a number on the
QOQ basis.
Sorry?
If you look at QOQ basis from Q3 FY22 to Q4 FY22.
So on QOQ basis, the expenses are more or less in line with that. The marketing cost.
Okay, got it. So then what explains 95 to 111 crore increase in cost?
So apart from marketing cost, which is a normal just about 1.5 crore, there are other costs with respect to the logistic cost, the admin cost, then the few CSR expenditure which were not there in the Q3 were also been there in the Q4. So all these have amounted to increase in the overall operating expenses as compared to Q3 numbers.
Got it, sir. Just one question on the logistics. So can you explain from FY21 to FY22, what was our logistic cost as a percentage of revenue in FY21 full year and FY22 full year?
So logistic cost, you want in terms of number or in terms of percentage?
Anything that is convenient.
So overall, logistic cost means put together domestic as well as exports. This will be somewhere around 3.5%.
For FY22. Last year, what was the number?
And the same was around 2.5% in the March 21.
Okay, got it. So basically, despite decrease in exports revenue, the number has gone up by 1%.
Yes.
Okay, got it. Just now, last question on the exports revenue. So Q3 was, I think, the worst quarter we have had in the last few quarters, and there is some growth from Q3 to Q4. So what explains that sequential expansion in revenues? Is it because of US or other markets?
From Q3 to Q4?
Yes.
So Q3 number from the export formulation business was 26 crore and it's 30 crore on a Q4 basis. And we have some US contribution as well. So I would say the major shift is not there. Means the more or less number for the Q3 and Q4 for export sales are on the same line.
Okay. Okay. Now, this, on the capital allocation part, so we did this buyback in Q4. Now, our understanding is that we can do it almost like after 12 to 15 months. So, in FY23, we might not do any buyback. So, will we will we pay out based on some dividend, or will it be a small portion?
So we would not like to comment as of now because it's a board decision. We will come back to you whenever the board decides. So as of from the regulatory perspective, you must be aware that once the buyback has been given, there is a cooling off period of 12 months. Regarding the decision on the buyback or a dividend, it's a board decision which will be conveyed to you in due course of time whenever the board decides.
Okay, sir. Thank you. Thank you so much.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Participants, to ask a question may press star and 1 at this time. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Aditya Kemka from InCred AMC. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, you must have already taken price increases in the India business in April. Can we get some sense as to what is the level of price increases we have taken in the NLEM portfolio and what is the level of price increases we have taken in the non-NLEM portfolio?
So for the NLEM portfolio, we have taken a price increase by 10.7%. And wherever possible for the non-NLEM portfolio by 10%.
And so what would have been the weighted average price increase for the entire India portfolio?
So it could be anywhere around between 70 to 80 crore on an annualized basis.
70 to 80 crore, and our India sales is 1,000. or 7 to 8%, less than 7 to 8% actually.
Yes, so 1,300 crore.
Right. And 70 to 80 crores is only 6%, 5 to 6%.
Yeah. Yes.
That sounds on the lower side, sir. So that means in majority of our non-LLM portfolios, we have not taken a price increase.
So what happens ki the non-LLM portfolio, it's not due everything on the 1st of April. It keep getting due on a full year basis. So the price increase we may not get on the 1st April for all the portfolio. So as and when gets due, as and when that 12 months period over, we take the price increase. So when you calculate the weighted average, mostly it falls between 7 to 8%.
7 to 8%. I understand. And sir, given the raw material prices where they are now and the price increase that you have taken, do you believe in FY23 we will be able to do better gross margins than we did in FY22, or will it be worse?
So you are all aware there are input costs are going up everywhere. So we are not sure how it will be span out in the next 12 month of period. So we have to wait and watch so that we can give you further guidance on that.
Right. Right. And last question, sir. In terms of capex plans, what do we have for FY23, and how much do you plan for FY24 if you have that number?
So we have planned about 120 crore for capex plan for the next financial year.
Mm-hmm. And next year, sir, the year after that?
So as of now, we have planned for the FY23 only, and the other major project which we have, I think, already explained in the previous call about our ALP4, so which is already budgeted.
Mm-hmm. So it's likely that your 120 crore capex for FY23 will continue in 24, right? Because the capex,
Yes.
Yeah. So the plan is more than 200 odd crores, right?
Yeah.
So it will be both years 120. Understood, sir. Thanks.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Jayant Mamania from Care Portfolio Management. Please go ahead.
Yeah, good afternoon. Sir, in a press release, you have written that you are going global for electrol and you have received registration in several countries. So, can you tell us the present geographic distribution of the electrol cells and which countries we have received registration, and what are our future plans and what kind of growth are we expecting?
So this is Amey Chandawakar. So we have been selling electrol in Myanmar. So that's one important market. We have quite ambitious target there. Apart from that, in also UAE, we have registered the product. There are few other markets. It's a little early now to talk about specific markets and specific sales targets. So as and when we start selling and once we start performing in these markets, we will keep you all updated.
Sir, have you planned any marketing budget to launch this product globally?
So what we are doing in Myanmar is we are to an extent partnering with our distributor there to promote the product. So there is a promotional budget in Myanmar. Similarly, we will consider promotional budgets where it makes sense in the other markets.
So what is our present sales beyond India, outside India, electrol?
So right now, we do not give specific numbers on electrol. As an ORS category, we are selling about at least 30 to 40 crores from our export formulation business. So that includes ORS also. So it goes as a generic, and when we participate in tenders.
So our Q4 margins were under pressure due to raw material price increase. So how is the present scenario?
So as I explained, the Q4 margin are under pressure mainly because of 2-3 reasons. One is the one-off item which I explained on account of COVID-related inventory, which has impact of close to 2%. Also, the revenue from our US business is on the lower side. And third is the inflationary increase across the board on the raw material and the packing materials. So these are the main 3 reasons for the lower gross margin for the quarter.
Sir, there was a plan to spend around 250 crores on office building. So is that still on?
Yes. So that is going on. The construction work is going on at our plot at Oshiwara. So still at its very early stage. It will take at least 2 to 2.5 years to complete.
So in next 30 months, we will be spending 250 crores on office building. What would be the size of the building in terms of square feet?
So first of all, I don't think so it's 250. It's more or less around 200 odd crore, and it will be about a 10-storied building, which will be having an area of around 1 lakh square feet.
Okay. The land already belongs to us. So this will be spent only on construction costs, correct?
So this 200 crore is only our construction cost, including the interior.
Acha, okay. Sir, we have around 1,000 crore cash in the balance sheet. So can you tell us how we are planning to use this?
So first of all, I think you are looking at the number of March 22, which is not 1,000, it's around 850. Out of 850, recently you must have received a buyback money also. So we spent close to 170. So now the balance is around 750 odd crore.
So is there any acquisition on the card?
So that will be communicated to you as and when it's crystallized anything.
Yeah, any negotiations going on?
So we can't comment upon on this.
Okay. Thank you. That's all. Yeah.
Thank you.
Thank you. A reminder to the participants, to ask a question, please press star and 1 on your touchtone telephone. Also, participants are requested to limit their questions to maximum 5 minutes. Participants, to ask a question may press star and 1 at this time. The next question is from the line of Neelam Punjabi from Perpetuity Ventures. Please go ahead.
Thanks for taking my question. My question is in relation to the previous participant's question on the export formulation business. So as I see in Q4 FY22, our export formulations was 47 crores versus 37 crores in last quarter. So just wanted to understand what has driven this growth QOQ, and is this number a base that we can take on which we can grow in the future?
Yeah, so the numbers are right, and the reason for the degrowth in the Q4, as I explained, is mainly because of our US business. And I would say to some extent these numbers are affected, was a one-off kind of a reason maybe in Q4 also, because we were at a good healthy number in the March of the last year also. So you can take the March 21 as a base number for the future growth purpose.
Got it. Okay. No, but I was trying to understand quarter on quarter. The number has gone up from 37 to 47. So what has led to this growth quarter on quarter?
So that's because of our US business only.
Okay, got it. Could you give us an outlook for FY23 in terms of top line growth of the entire international business as well as the domestic business? For domestic business, as you know, FY22 was a very strong year for us, 31% YOY growth, which would have been driven by COVID. Are we confident of growing on this base of FY22?
So we would not like to comment on this number as of now because it's still very early stage, and although we have factored in the growth internally, but we will not be able to give any guidance on this numbers perspective.
Got it. Okay. My second question is on the other expenses. So you said that we had lowered other expenses on account of COVID in FY21. However, if I look at your pre-COVID run rate of other expenses, it was around 80 crores on a quarterly basis, versus in this quarter we have registered around 111 crores of other expenses. So what is the reason of this this sharp jump in other expense line item?
So first of all, though, it's I would say it's not comparable compared to Q3 versus Q4, or even if you are comparing last year Q4 versus this Q4, the numbers may vary on a quarter-to-quarter basis. The reason being you are comparing March 20, which is 2 years back than the March 22. Secondly, the revenue numbers for the March 20 and the March 22 was much higher than March 20. Third, all the expenses which were there in the March 20 are related to the revenue numbers. So I would say like the marketing budget or the logistic number or few semi-variable costs which are related to the revenue. So the revenue has gone up in the March 22. So all the operating expenditure which are variable or semi-variable cost will naturally increase to that proportion. So this is the precise reason for the increase in the operating expenses in March 22.
Got it. So is it fair to assume that this 110 crores of other expense and 80 crores of staff cost, 190 crores for the quarter, so about 760 to 800 crores is the base of fixed expenses that we will incur in FY23?
Right.
Got it. Lastly, I just wanted to understand, we have a capital work in progress of 105 crores. So what is this in related to?
So as I just explained, our construction work for our a new office at our Oshiwara place is going on, and for which we have paid a certain construction cost and a government premium, which is to the extent of 60 crore out of this 100 crore. And the balance relating to one of our projects at our Waluj plant related to ALP4, which is total budget is around 70 odd crore, out of which we have spent, which is included in CWIP, to the extent of 7 crore. And the other item are related to a few civil expansion which we have taken up in the other plant like Goa, Sinnar, and few other replacement and upgradation budget for all over the plants.
Got it. Okay. Just last question on my end. In the previous calls, we've mentioned that we are confident of growing ahead of the Indian pharma market. So are we still confident on growing ahead of IPM in FY23-24?
Yeah, so hi, this is Mayank. We said this in the last call. We are still internally confident, but as you might have seen, there's a lot of correction happening in the market post-COVID, and market is behaving in a very uncertain manner. So though internally we have the confidence, but probably we cannot guarantee any number or growth perspective because the market is not to be predicted as of now. You might have already gone through the market numbers of April, whether it is AVAX or IQVI. Both have shown a high negative growth. So we are still watching. We are working our way through our portfolio, and we'll keep you posted in our subsequent calls.
Great, that's helpful. Thank you. I'll get back in the queue.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Nikhil Jain from Galaxy International. Please go ahead.
Yeah, thank you for the opportunity. Just a couple of questions. First, I see that we have provided the breakup of all the key brands, but in some of the brands, we seem to be losing market share, right? So while we are growing, but we seem to be losing on the market share. So is there any specific reason for that, or any comments on that part? Yeah.
So, if you're referring to our presentation which we uploaded, yes, we have lost our market share in Enerzal slightly. This is mainly because this market is very different and maybe there are a lot of factors into it. It's a very wide category market where a lot of players keep on entering every year. It is not 100% prescription-driven market of energy drinks. So that is the reason why we have lost. But the domain at which we operate, that is the doctor fraternity and the chemist business, probably we have not lost any market share. But to be fair, we have given you the market dynamics overall. As far as Electral is concerned, which we have maintained our market share and leadership as compared to last year. And in Ziffy also, which is our #1 flagship brand, there also we have maintained our leadership. So Enerzal, yes, we have lost. We are working our way up. We would try to regain if possible. We are aggressively working on this brand.
Okay, thank you. Second question was with respect to the US market. So we are putting a lot of efforts and energy behind the US market. However, the numbers, as we all understand, are not so consistent because it's a very competitive market. So what is management's view and strategy for US market, given that we are going through a partner and we don't intend to be there directly, right, present over there? Yeah.
So we'll continue. This is Amey. We'll continue to keep registering products so we own the ANDA and continue to partner with the existing partners, maybe new partners. Also, we have not categorically said that we don't intend to be there ourselves. So I'm not sure where you're getting that information from. We are still open to that possibility. However, right now, we are happy partnering, and it's been a very lucrative market for us, particularly from the bottom line perspective. So it is a key focus market for us.
Okay. But, sir, if you are not, let's say, vertically integrated this time, so normal tablet or products would be very, very difficult to sustain in the US market, right? So that is what at least I have seen with some of the big companies. So while our specialty of eye drops and ophthalmic products, I think it would be good for us. But if we go into the generic regular products, then it's going to be a very competitive market. So that's where I'm just, let's say, trying to understand that rationale. If we go through partner and then in generic Me Too products, it is going to be a difficult market.
Yeah, I completely agree with you. We appreciate what you're saying completely, and your point is well taken.
Okay, thank you. Just one last question. So how much is the R&D spend that we did for this year? And if you can break it up for India and other markets, it would be great if it is possible.
So R&D expenditure is in the range of 2% of our revenue only.
Okay.
At this point of time, we will not be able to give you the breakup between India and export business, but you can drop an email, we will provide that information to you.
Oh, fair enough. So 2% is very small. So in any case, and I think India doesn't need so much of R&D spend. So most of it would be directed towards the US and other regulated markets. Okay, thank you, sir. Thanks a lot.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Pralay Lal from Progressive Shares. Please go ahead.
Hello.
Yes.
Yeah, hi sir, this is Payal here. I just wanted to ask you that as you mentioned that there was a one-off item of 11.7 crores with regards to COVID-related inventories. So just correct me if I'm wrong, was a provision created for this quarter or is this amount already expensed out?
So I would say it's one and the same thing. So we are carrying the inventory of COVID-related drugs, and inventory is as of 31st March is a short shelf life inventory. So to have a prudent accounting, we have provided that inventory as a part of provisioning to the inventory. So that's why it's charged to a P&L.
Okay, so that's already been expensed out for this quarter.
Yes.
Okay, and additionally, so did you see any COVID contributions from your COVID-related drugs, or is it a fading effect as of now, considering the receding cases?
So this is Mayank. We launched a couple of drugs, but majorly it was Favipiravir, which we launched, and we did get a revenue of approximately 18 odd crores last year. But we don't see a future, and that is why we have completely withdrawn ourselves from that market now, because the number of cases what are prevalent as of now in India are not substantial enough to substantiate any direct treatment in the form of Favipiravir. So it is an internal call which we have taken from a marketing standpoint. So we will not be moving forward with this any kind of therapy as such.
So that would be completely excluding from the Favipiravir sales any COVID-related drugs that come up in the near future.
So again, future I cannot define. This was a major launch which we did. Apart from this, there were a couple of very small launches which were not significant. But in future, we'll see how as I said, the market is very dynamic and newer drugs keeps on coming. But looking at the current spectrum, we are not taking any calls on COVID-related products.
Okay, so the entire portfolio would contribute roughly about what percentage to your sales?
You are asking for COVID?
Yes.
So again, this is a very broad, COVID was a broad terminology. There was certain drugs, as I said, Favipiravir was direct treatment to COVID. But overall, you might be aware that many of the antibiotics, core therapies have also gone up last year during COVID. So these were our maybe mainstay products which we are continuing. So they got a traction during COVID because of allied prescriptions which doctors are generating during COVID era. So that business completely doesn't get impacted any which ways, with or without COVID.
Okay. And so in terms of Favipiravir, so are there any backlogs which were there now, since you are saying that you would exclude this seeing the scenario, or like everything is done and dusted for now?
So everything has been done in the March 22 quarter itself.
Okay. Thank you so much, sir. That helps.
Yeah.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Neeraj Kamtekar from Prosperity. Please go ahead.
Thank you, sir, for the opportunity. Sir, I have 2-3 questions. The first question is related to the medical representatives, number of the medical representatives. In the current presentation, investor presentation, it was given that the 3,200 something numbers of the MR. And in the earlier presentation, it was mentioned the 4,000. The November month's presentation, the 4,000 medical representatives were mentioned. Why the number has been reduced from 4,000 to 3,200 numbers?
So we'll check the last presentation, but it might be the total field force, what we might have mentioned earlier. There's no reduction, what I can tell you. In fact, in the last year, we've expanded in the number of MRs overall, because we launched in the month of April our Nutrica division, which will be focusing on nutritional basket, especially the IMS products. And also in January, we launched our Zocon division, which is also a flagship brand to cater to the dermatological baskets. So in fact, we have increased the number by approximately 500 odd people in the field, that is MRs. We'll definitely check what we have presented in the last presentation. It might be the total field force. Here, 30 to 42 is only the MRs, only the grassroots people who are working in the field.
Okay. The company, in the last 2 buybacks were at the rate of 470 and 450 per share, and each buyback the promoters have participated, and naturally the respective number of shares are accepted for them also. And the current market price is at least 40 to 45% discount to the buyback price. In such situation, the promoters are not considering the buying the shares from the open market if they feel that there is an intrinsic value which is more than the current market price, and the buyback was at 450 or 475 rupees. So, what is your comment, sir?
It's a good suggestion.
Okay, sir. Okay, and any major products under the pipeline, sir, to be launched?
As of now, we would not like to disclose. Once we launch anything very significant, we'll definitely inform you in our subsequent interactions.
Sir, the last question. The Energal is more of a soft drink or energy drink product. So, do we have any particularly marketing budget to promote that product? Because you consider that for the launching of this type of product, there is no restriction. So, there must be a tough competition from other players also. So, for us, any marketing budget or marketing theme has been considered?
So this product, we do agree. As I said, that it is a very widespread product. A lot of competition from FMCG players are also there. But we being the prescription-driven company, as of now, we have gone through the route of doctors and chemists only. There are some efforts which have been made, but they are not very significant to take it to the other channels. As of now, whatever sales we are generating, it is mainly from our doctor prescription support. So it is a very scientific base, though we call it an energy drink, but it is a very scientific energy drink which the doctor prescribes in various indications. We'll see how we can move with this product in future. As far as your budgeting is concerned, marketing budget is in line with the divisional budget and the overall corporate domestic marketing budget. So we don't have any special allocations for this brand.
Okay, sir. So, sir, the dermat will be the next focus area after the GP product and ORS. Then third will be the dermatologies or dermat products.
So we already were present in the dermatological basket because Zocon is a significant product which the market size is almost 51 crores for us. So we are always present in this therapeutics. But what we have done a change is that these products were spread out in various divisions. So we have consolidated that therapy into one basket. So this division, though the therapy would be dermatology, but they would be catering to other specialities also, wherever the derma products are being used. Just to give you some is gynec, even GP, physician, But yes, you identified correctly. Probably this would be one of the focus area we'll try to grow further in times to come.
Sir, in that division, any cosmetic product will be launched other than the prescribed product? Any cosmetic product fall under the dermat category?
So at this juncture, I'll not like to comment on this. As I said, as we take any steps further, we will be informing you of any development.
Thanks, sir. Thanks, sir. All the best, sir.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Nikhil Jain from Galaxy International. Please go ahead.
Yeah, thank you for the opportunity again. Just a couple of more questions. So one was on South African subsidiary. So how is that business performing? Now we have a majority and almost complete stake on that. So what is the management's outlook and strategy towards that business? Because yeah, thank you.
So Nikhil, we have hired a new person also there to head that business, and things are starting to look better than they were in the past. Early days right now, we believe that it will take us at least 2, maybe 3 years to turn that business around, and over a period that entity, FDC SA, can serve as our head office for the entire, at least the southern part of that continent. So we are quite optimistic about the prospects of that business.
Okay, thank you. Another question is on with respect to the export formulation sales. So outside of the US, how much is our export formulation sales, and what is the trend over there? So what are the major countries outside of US where we actually export our products, and any specific thoughts on how do we want to increase that if you're planning that?
So as of now, look at the quarter March 22, 50% of revenue coming from US business, and the rest is spread across the other countries.
Okay. And we are continuously registering products in some of these countries also, including, let's say, for example, South Africa.
Yeah, absolutely. Yeah.
Okay, sir. Sure. Thank you. Thanks a lot for taking the questions. Yeah.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Neelam Punjabi from Perpetuity Ventures. Please go ahead.
Thanks for the follow-up. While I understand that you all are refraining from giving any quantitative guidance, but if you can please help us understand that over the next 2 to 3 years or 5 years, what would be the key growth drivers for FDC? What would be the key focus areas for us? And we just wanted to understand what is the management's vision for FDC over the next, let's say, 3 to 5 years, the long-term vision.
So I'll answer that in 2 parts. When you look at our key growth drivers, you are already aware that we are big into antibiotics. So we are continuously focusing on our antibiotic portfolio, and we are trying to revamp some of the low-end antibiotic therapies which we are already present for the future. So we are trying to create bigger brands out of our antibiotic portfolio, which we have been already marketing for almost 5 to 7 years. This is one. Another segment which we are already present are two big brands, Electral and Enerzal, and these are very buoyant in today's market. So we are definitely working our way up and fortifying ourselves as a distinct leader. Though we enjoy the leadership, but we are trying to regain more market share and try to take the volumes up for these two brands. Apart from the newer interventions, what we have done, I explained in the last question that we have now come up with two more divisions in the last financial year. So we are definitely focusing on the Nutra basket for the next 3 to 5 years. Our presence were already there, but yes, we are going very hard on these therapies now. Our definite focus is there on nutraceutical basket, and the results are very encouraging for the first financial year. Apart from this, as I said, the second division which we have launched definitely in the derma category of products. So this is one area which we are trying to fortify our presence. We already have one big brand in the form of Zocon, other brands like Mycoderm, Cotaril, which are already there. So we definitely will be moving into this category and try to gain some market share, additional market share in the next couple of years. The third category which we are focusing now is the cardio-diabeto market, where again we are present, we have volume, but we are not a very significant player as of now. So one division definitely is focusing on this market. So these are a couple of broad points which we are working on, and we are confident in the next 3 to 5 years, probably these category of products, broader category of products, what I said, would be able to drive growth for us. Any further opportunity which comes our way, we'll definitely look into that also.
This is very helpful, sir. This was on the domestic side. If you can just also highlight our key strategic initiatives for the international business as well.
Sure. So what we are currently doing in international business, if you look at our base, it's relatively low compared to our peers, and also as a proportion of total revenue, our total international business is relatively small. So there is significant potential for us to grow not only in the regulated markets such as the US, UK, but also in many of the other smaller markets, or let's say slightly less regulated markets. So we are registering products across the globe. That is a key focus area. Also, wherever possible, we will start investing in promoting our products in international markets. Earlier we spoke about how we're starting to promote Electral in Myanmar. So similarly, we'll take up specific markets in Kenya also. To an extent, we are participating in promoting our products through the distributor there. So that's how we will move forward in international business. And we are quite optimistic that the next 3 to 5 years, we should be able to grow meaningfully in international business overall.
Got it. This is also helpful. Thank you. Just lastly on my end, a couple of years back in the annual report, we had mentioned that we acquired this brand from GSK Entero Plus. So if you can just give us an update, how is that brand doing? Is it picking up right now?
Yeah. So we acquired this brand 2 years back, but unfortunately, because of the COVID lockdowns, we couldn't work our way through that brand. So the volumes were pretty low, but now we have taken that brand very aggressively, and we are looking forward for milking this brand. Just for information, we have also added a couple of more SKUs in this portfolio. We have added the capsule formulation, and we are also coming up with the drops for the neonates. So we are taking this brand very seriously, and we have taken aggressive targets for the current financial year.
Got it. But does this brand have the potential to be among the top 10 brands of the company?
Very difficult to say, very early days, because our top brands are already touching 300 crores, what we shared. Now, this molecule or maybe this product doesn't have that kind of potential in the market as of now. As of now, we are talking about. So difficult to comment. I cannot say whether it will be coming into the top 10, but definitely it is among the top focus brand where we are working on.
Got it. Thanks a lot for answering my questions. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Neeraj Kamtekar from Prospero Tree. Please go ahead.
Thank you, sir, for providing one more time the opportunity. Sir, one of the dermat product of the Glaxo, Zimic Cream, is either withdrawn or not available in the market. So can company consider to launch such product or buy the such brand which is the famous in the market, particularly the Zimic Cream?
So we have to check the details. As of now, I cannot comment on this.
Okay, because we have also the one of the dermat portfolio, so and it is not available in the market. Earlier we have also the Entroplus was bought from the Glaxo. That's why I had asked this question, sir.
We'll definitely check and revert back to you.
Thank you, sir. Okay.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Swaminathan, from an individual investor. Please go ahead. Mr. Swaminathan, your line is in talk mode. Please go ahead with your question. So we are unable to hear you. If you have muted yourself from your handset, kindly unmute yourself and please proceed with your question. Seems like we lost the connection for the current participant. A reminder to the participants, to ask a question may press star and 1 at this time. This is a final reminder to the participants. Anyone who wishes to ask a question may press star and 1 at this time. As there are no further questions from the participant, I now hand the conference over to Ms. Varsha Rani Katre, Company Secretary, for closing comments. Over to you, ma'am.
Thank you all for joining this earnings call of FDC and expressing your views. In case if you have any concerns, please reach out to us on investors@fdcindia.com. Thank you again. Over to you, moderator.
Thank you. Ladies and gentlemen, on behalf of FDC Limited, that concludes today's earnings call. Thank you for joining us, and you may now disconnect your lines.